Hello everyone. In this video, we will try to understand what are the KYC or customer due diligence requirements of an entity type trust. And we also try to cover some important aspects about trust, type of trust, and its KYC requirement. Uh, if we look at the entity type trust, trusts are considered to be high risk entity due to its legal arrangements and anonymity involved in the entire structure. So there have been lot of instances or case studies available where we can ascertain how trust being misused for money laundering or terrorist financing purposes. So trust can be a very tricky type of entity as it can be structured in such a way to avoid detection of real beneficiaries. Trust can also be used as a vehicle of tax evasions. Trust can be set up in jurisdiction which are very opaque and make it difficult for any law enforcement agencies or counterparties to be sure who is actually behind the trust. So in this video, we would cover the entire standard customer due diligence process of trust in little detail. If you're watching this video or you are on our channel for the first time, please subscribe for more video on EML or KYC concepts. And if you have any questions or feedback, please share your comments. So let's get started. Before we try to understand like what are the KYC or customer due diligence requirement, let's try to understand a few important concepts. So what is trust? Trust is a legally recognized relationship that exists between A, who holds assets, and B, who benefit from those assets. We need to understand that a trust is not a legal entity, just like a company or a partnership, right? Uh, the next important concept is trust deed. Uh, think of a trust deed is a legal agreement that contain the terms and conditions of the trust, and it stipulates the role of a trust as well as how the trust should operate. And trust me, like having a trust deed for KYC requirement is quite critical, and this normally comes from a customer when we actually get into KYC or customer due diligence, because it has a lot of different information which need to be captured. So next important aspect is settler. So settler is the individual who established the trust. In order to establish trust, the settler will need to appoint a trustee and name the beneficiaries. And once the trust is established, the settler will no longer fulfill any role in relation to the trust. Okay, but what we have seen is in few of the jurisdiction, we are required to capture settler and some of its important data attributes. So next is trustees. The trustees of the trust is it can be individual or corporate entity. So who are responsible for the asset within the trust, for ensuring the trust is managed as per the trust deed, along with managing the asset of the trust in accordance with the trust deed. Trustee is responsible for distributing any income and capital gain of the trust to the beneficiary. Then comes beneficiary, for which the trust is created. These again, it can be entity, it can be individual that benefit from the trust. Beneficiary have no control over the trust and simply receive their benefit in accordance with the trust deed. The trust doesn't pay any income tax as all the profits are distributed to the beneficiary. As a result, beneficiary pay the tax on the income distributed to them. Now, since we understand like some of the important concept around trust, so let's also understand what are the different types of trust. So we normally see there can be multiple type of trust, but for our understanding, we have kept it very simple. We have divided these trust into mainly into four sections. uh, so one important type of trust is discretionary trust. In the case of discretionary trust, the trustee is given complete discretion as to how the trust income is distributed to the beneficiary. Discretionary trusts are generally associated with asset protection and tax planning. Uh, One example of a discretionary trust is a family trust. And a family trust is set up to manage family business or hold a family personal or business asset. So next is fixed trust. As the name suggests, fixed trust require the trustee to hold the trust asset for the benefit of beneficiary in specific fixed percentage. So the trustee doesn't have to exercise discretion in dividing the trust property. Instead, each beneficiary is entitled to their fixed share of trust capital income. So one example I would like to quote in case of fixed trust would be a unit trust. A unit trust works similarly to the shareholders holding share in a company. In this case, each beneficiary to the unit trust hold a certain amount of unit within the trust and is entitled to the trust income and capital based on the proportion of unit they hold. Next type of trust would be charitable purpose trust. Uh, for a trust to be charitable purpose trust, it has to be created for one of the four following reasons. It can be for relief of poverty, advancement of education, advancement of religion, other purpose that are beneficial to the community. Charitable purpose trust typically have the lowest rate of tax applied to them. Now, the next one being mixed or a hybrid trust. So it does not strictly fit the description of only one type of trust. So mixed trust demonstrate just how flexible trust can be. Uh, a good example of a mixed trust is a trust where some assets are treated as though they were part of an interest in possession trust, while other assets are treated as though they were part of a discretionary trust. Now, with that in mind, we will try and understand what are the main KYC element. So let's understand the customer due diligence process for the trust. And if you see in a layman terms, customer due diligence would involve verifying customer identity, understanding business to assess the level of risk they possess, uh, and then you may also refer our few old videos on customer due diligence to understand when customer due diligence is performed, type of customer due diligence, difference between enhanced due diligence, standard due diligence, and simplified due diligence. But for our today's video, we'll focus on the six main elements which primarily applicable for every entity types. So the first one being identification and verification. Here we identify and verify the identity and legal existence of the trust. So we'll try to understand whether that whatever information or document provided by trust are correct, and it's all the documents, all the legal name are the way it's being shown, it's available in the documents, whether it's a trust deed, whether it's kind of any registry or a government website. So next being understanding of customer profile. So here we try to understand the purpose of creating a trust, which year trust was created, the ownership structure, nature of business, purpose of relationship, and so on. Identify associated parties. So it's also quite important to identify associated parties, which also bring some kind of risk in to banks, and which need to be mitigated. But for our understanding, the associated parties would include UBO, settler, trustee, beneficiary, which need to be identified and verified. Then once we understand everything, or I would say we have good information about the entity and its associated parties, so we perform name screening, adverse media check on its UBO, on the customer, or in our case it would be trustee, and other associated parties, just to make sure that they are not part of any sanction entity. There are no PEP involved, which would actually increase the risk level. So once screening is done, the next important attribute is risk assessment. So basis the screening and other information which are taken during identification or understanding customer profile, where we understand what are the country of operation and what are their legal name, basis the sanction screening, PEP screening, or adverse media check, we would assess the risk. We identify the risk presented by customer basis the information which is captured. And then next very critical aspect of KYC is documentation. So it would be critical to save all the evidence and to keep the record of actions and exemptions or assumptions which has been taken while onboarding onboarding a trust. Now let's get into more detail about these six components. So we'll start with identification and verification. Identification and verification is of a customer is critical component of an effective customer due diligence process. Identification of a customer is followed by verification through official documents and records, and this is the first step in customer due diligence process. So here we are required to identify the full legal name of the trust, a full name of trustees, and any other name the trust uh, which carry on their business. So it is important to identify and verify the correct legal name of an entity to differentiate it from similar sounding organization. And also, previous name or aliases are important when we perform name screening, as organization may be known as other name previously, and change the name once it is listed on any of the blacklist. And then we also verify the address, which would include registered address, uh, principal place of business, country of incorporation, country of operation. The principal place of business and registered address help the bank to understand that they are not getting into a relationship with a customer who is operating from high risk or sanctioned country. Also, a majority of banks do not accept PO box addresses for the obvious reason. Now, we also try to understand, verify, and identify date of establishment of trust. So this can be verified either through trust deed, or if there is any registry in that particular jurisdiction which provide date of establishment. That's how we can verify and identify this piece of information. Then the type of trust is also quite important, because basis the kind of trust, the data attribute, the information need to be captured may differ. We also verify a legal registration number. So it is a unique number assigned to every trust in the country of their jurisdiction. It may be a tax identification number or any other number issued by the jurisdiction or the registry or a government registry in their country. Legal existence. Here we try to ascertain if trust is still active and not dissolved. So now, once we understand what are the different data attribute which need to be captured for a trust entity, here we also need to understand how some of the verification sources which being used in trust. So some of the independent reliable sources can be government website, trust registry in the country of incorporation, trust deed. This is normally provided by the customer, and sometime we have seen in some jurisdiction trust deed is also available in the government registry where they are registered. A settlement deed, sometime we also get some information from global database providers such as LexisNexis, Equifax, D&B, WorldCheck, RDC, etc. And at times where data is not readily available through independent or reliable source, bank also rely on customer emails and a statement to gather information. And we also seen that in some time some bank also consider trust website to capture some of the data attribute, if not all. Once we have performed identification and verification of customer, and we are certain the customer is who he say he is, next step is to gather more information to understand the customer profile better. And here one of the important step while we understand the customer profile is to identify and verify the identity of the third party. If your customer is acting on behalf of third party, the third party can be individual, entity, people uh, who may be called as gatekeepers, such as chartered accountant, lawyers, etc. One of the regulatory requirement is to verify identity of all ascertainable beneficial owner of the trust. Identification and verification of UBO is important for a bank to initiate a relationship and discontinue business relationship if customer or UBO is involved or or maybe rated at high risk for altogether different reasons, which can be being in high risk country or part of sanction list or blacklist, etc. So this was about UBO, and while mapping UBO, there may be a chances that we are only able to identify 85% of the ownership, and the remaining ownership is not easily available through online approved sources. In all such cases, we may perform client outreach to provide complete detail of ownership. So now moving on to the second important data attribute, which is nature of business. So customer may carry different level of risk depending on the activity or services they provide. Understanding the nature of business come very handy and one of the critical factor during customer risk assessment. Now, in order to understand the nature of business, we need to understand products or services provided by customer, total turnover of the trust for last 5 year, investment portfolio if any. Then we also try to understand the nature of relationship. It is important to ascertain the nature of relationship with customer. Uh, so is it a credit card account, trade finance, checking account? Bank would also determine whether product or services requested fits within the customer's nature of business. So basis the product opted by customer, risk level would also differ during the customer risk assessment. Then one of the other critical aspect is source of fund. Source of fund refer to the origin of a particular fund or any other monetary instrument which are a subject of transaction between a bank and a customer. Understanding a source of wealth is the cornerstone of the due diligence, particularly for ultra wealthy whose transactional behavior is often of much greater magnitude than those with lesser wealth. Normally, this information would come from client itself, but it would be important to understand source of funds are proceed from customer business activities, any other source of fund other than business activity or services they provide, suspicion about the legitimacy of the customer source of fund. So then we move to our next critical data attribute, which is source of wealth. Source of wealth is distinct from source of fund and describes the activity which have generated the total net worth of a customer both within and outside of relationship. Those activities that have generated a client funds and property. Source of fund is not a general customer due diligence requirement, but it is required during enhanced due diligence. So now moving on to to our next element of KYC. Uh, the next step is to perform the identification and verification of associated parties. The associated party, in case of trust, uh, will include, but not limited to, trustee, settler, uh, a full name of beneficiary, or detail of membership class, key individual, and principals. The key individual and principals are employed chosen to control and govern the daily business activity of a legal entity. And when we look at the individuals which are identified as associated party, the details we normally capture are full name, date of birth, country of residence, and the source which we normally use to verify uh, these data attributes are government registry, trustee, passport, driving license, or other government issue document, or a trust website if that is uh, allowed or approved source by the bank. Now, moving on to next important element is screening. So name screening is done by checking the identity of the customer, its beneficial owner, main principal, and other associated parties against the screening list. So we have normally bank use various third party service provider such as World Check, RDC, where we can screen the customer and its associated party. And sometime what we have seen is, depending upon bank policies and guideline, the screening result may remain valid for 6 months, 9 months, or a year. So we already have a separate video on name or customer screening. So you may also refer it for more understanding. Now, moving on to next element, which is risk assessment. The customer risk assessment is important part of the entire KYC and customer due diligence process. Uh, it's normally carried out using a customer risk assessment model based on identification of high risk indicator and red flag. So some of the red flag will be identified during some other KYC processes like transaction due diligence, customer activity monitoring, and then normally the risk assessment model would have a different risk factor, which would have sub risk factor, which is already defined in the assessment risk assessment model. So some of the high level risk factor is entity type risk, country risk, industry risk, and product risk, which are four high level risk factor, which normally becomes a part of every customer risk assessment model. Risk classification can be high, medium, and low, and the risk classification will drive the frequency of future periodic review to be performed on the client. And in case the risk level of the client is identified as very high, the MLRO, or a money laundering risk officer, has to be contacted and provided with clear rationale behind why it is considered as very high risk. Now, moving on to our last and very important KYC element, which is documentation. So once we carry out the CDD process, we need to ensure that we are able to present this knowledge of our customer in a clear, comprehensive, and consistent manner. And the comprehensiveness and consistency is important for both internal stakeholder and for demonstrating our approach to external stakeholder such as regulators or or auditors. uh, the customer due diligence document or folder of each customer should clearly demonstrate the information and documentation obtained during the customer due diligence review, presented with maximum clarity and comparability. So it is always good practice that every document we save should have clear description of its type and the purpose of which is mentioned on the first page. If document consisting more than one page, uh, we should have a short content list with relevant pages and key information on them, that too on the first page. If the document is translated, then it is advisable to mention a source of translation section which have been translated with the purpose. Another good practice in documentation is to following the naming convention. This helps in identifying the relevant document as well as save a lot of time which you may spend in identifying a document in absence of no or improper indexing. So we hope you like you would also like this video. Please share your comment and if you want us to prepare any specific video on other interesting topic, do let us know. Thank you for your time.